Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good evening. Thanks everyone for joining. Welcome. We're going to get started in 1-2 minutes. Guys, this is going to be our session 2 of our SST trading, Learning Trading Academy. We're going to go over a few other things today, and we're going to continue with this. So we're all ready to be trading New York in the next couple weeks, okay? And then we'll continue this series as we do our Tokyo sessions for the next little bit. And then a lot of these sessions are going to move private, okay? So let's see if we can learn something new, pick up off of yesterday, and lots going on around the markets. And I hope you guys are learning, because I guarantee you'll learn something new in tonight's call, okay? So just give me a couple minutes and then we're gonna get all started, just setting up YouTube here.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, thank you for joining. Welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Good evening everyone. It is 6:30 p.m. Eastern. It's Tuesday, January 13. Thanks everyone for joining. I appreciate all of you guys. We'll just talk a little bit here about 5-10 minutes, and then we'll wait for more others to get in here, and then we're going to continue with our second class of our trading academy, and these are done live right now, and a lot of these are going to go private in the near future. Okay, so I hope you guys are learning from these. We're going to pick up where we left off from yesterday, and if you didn't get a chance to watch yesterday's, it's on YouTube and it's available for you guys. Okay, and lots going on. Like gold is moving right now, so maybe by the end of today's call we'll do maybe just a quick little top down and walk into maybe futures. I'd like to do a full complete session tomorrow doing top down analysis. I just want to make sure we get all the basics out of the way. And it's all freestyle, guys, what we do here. I don't have anything kind of scripted what we got to do. I just want to continue doing feeding off of yesterday's session and go over today's blog. Okay. So first things first, thanks everyone for joining. If you were trading today, I assume you guys did earlier this morning. There was core CPI data that came out 8:30. You guys were probably trading at that time. President Trump was speaking in Detroit at 2 p.m. near the end of the day. And if you guys are trading tomorrow, tomorrow is Wednesday. That's midweek, hump day. We do have now PPI data coming out tomorrow. So everything was due to the consumer side. CPI tomorrow's the producer side coming out tomorrow. Same time, 8:30. You do have some high impact US news. Please be cautious and use proper risk management when you're trading at this time, okay? We also have the crude oil weekly inventories coming out tomorrow morning at 10:30. A lot of you guys are interested in trading oil right now with everything that's going on concerning Venezuela and the United States right now. So I don't blame you. I got oil on my charts as well, and I'm following oil as well because anytime there's volatility, I like to go and trade at that time because I'm a scalper, so I look for some quick moves in and out. Hit a few trades and hopefully hit my daily goal and move on with the day. So I got crude oil on my watch list. We'll watch that too. We'll maybe get into more of a kind of a swing trading session on the weekend as well, where we can do some outlooks on higher time frames, and we'll include crude oil in one of those. Okay, guys, earnings: J.P. Morgan this morning, Delta Airlines. So we're going to get more into financial earnings as we go along this week. You can see tomorrow morning more U.S. financials will be coming out. Wells Fargo and Company, Citigroup, Bank of America, United Community Banks. These are the regional banks, but it's going to be heavy on financials coming, and then we're going to be moving into tech very, very soon as well. Okay, so earnings to start off the new year. And guys, if you've been just on here, if you've been following the news that's going on the first week of the new year, Powell testimony is focus of high stakes with the Department of Justice over here. So there's some drama going on with Powell and Trump over here, and this is developing news because the Federal Reserve is independent from the United States president, but Trump thinks that he can do what he wants, and we'll see what happens here. But this is developing, okay? Because I follow what's going on with the Fed because, you know, this is where they affect all of the monetary policy that we trade. So I will be focusing on this myself, as you guys should be too. Lots going on. So Nvidia's in the news. Tariffs again are in the news. Netflix is in the news. Same with this all cash buyout on Warner Brothers, going against Paramount over here. That's been since November of the last year, so that's still going on. But lots going on. Amazon is in the news. Powell is in the news. All kinds of stuff, Caterpillar and everything. And also, guys, cannabis stock outlook. Okay, we're going to do a part of the stock and options program. We're going to talk about some cannabis stocks because US may start to federally legalize, or at least make some motions toward that, and we can maybe see some volume moving into the cannabis sector in the near future. So I'd like to talk about a few securities in the cannabis sector industry as well that we can add to our watch list. Okay, and just moving forward, guys, if you need some trade signals setups, we do send these out here at SST. Here was one on gold for this buy setup right here. So again, we're looking for these areas, 4,580 right here where this blue box is. You can see how the volume is now coming down, selling into an area of support. So we talked about this yesterday. Here's a supporting level. There was a nice double bottom with the higher low, still respecting 50% of this body right here. Then there's the closing, retest, so you can see how this level is still holding. It did come down right into here, and then finally kind of retraced in there, traded right in there, and you can see how it kind of just came in here, consolidated, and then shot right through here, right back out. So this was the area we were looking for on the signal, 4,580, and you can definitely see how it played out. So yes, if you entered in prematurely, you realized a little bit of drawdown, but remember what we talked about yesterday. We wait for volume to close, and as soon as you got that closing blue bar, it's a bullish pin bar. You start to see it consolidate, then it took off. Okay, and if you missed out on the first entry, you could always look at again how the formation closing near the wick, and it's an ignited bar that did not pull back into the point of control of this candle and took off. Okay, and you got to also know the time when this occurred. Okay, was there news at that time? Is it an exchange open? Is it a specific time in the day? That's what we got to look for. Okay, so if you do need some trade signals, trade ideas, we do offer these with indices, commodities, FX pairs, etc. Okay, and guys, there's a free Telegram pinned at the top of YouTube for all of you guys on YouTube. Here's the live links to all of our YouTube sessions. So that's why I strongly suggest that you guys join this free Telegram, because you get all of the links. Here's the blog that we're going to talk about today that we just released earlier. The SST Trading Academy, Getting Started, Learning the Basics, Class 2 is tonight, but we'll go over a few things that I need you guys to make sure that you guys can put a check mark beside, and you guys have a pretty good understanding of what I'm going to talk about on that blog. If there's something that you put an X on that blog, then that's something that you should be working on and focusing a little bit more time on, because we got to get these in order to go to the next level. I need you guys to make sure that we all understand the basics of trading. Okay, and then we can start to move on to more advanced and more complicated things in trading. Okay, and here's a gold recap over here, the bullish trend continuation. I can go over that as well. It was a really detailed blog on the breakdown of that trade idea. So guys, please take advantage of looking at these blogs. If we're sending them out, there is a little bit of value in these. Okay, we're not just doing these just to waste our time. They are good blogs. They are very educational, and it's good learning on a daily basis. Okay, and everything that Dave is doing in the New York sessions, this is a trade, a sell that he took, and everyone in the Discord and in the Zoom over here. Okay, guys, so lots of value out of this free Telegram channel. Again, it's pinned at the top of the YouTube. Okay, and there is some copycats out there claiming to be us. That's why I'm telling you the one that's pinned at the top of the YouTube is us. We post it on every live session. Okay, if you get one that looks identical to this, and you get messages saying you send us $1,000 and we'll invest it, and Stock Sniper Trading will return you $10,000 in a week, it's a scam. Okay, so don't send any money. Okay, just be an adult about this. Okay, Dave and I would never send you anything like that. Okay, and this is our website, guys. StockSniperTrading.com is where you get everything over here. All of the education. Okay, so we have tons of education. I want to go over that near the end of the call to show you how to take what we're learning today and move it into the education, so you can further educate yourself. And all of our live sessions we do throughout the week. And guys, I just have to update you guys on Thursday. I just found out it's my son's at 7 p.m. We got to go to his high school, and it's like a parent-teacher night where they got to pick their classes for the following year. I had no idea. I just found out about it about an hour ago. So we'll still go with this, but it might change. If it changes, I'll throw a pre-recorded psychology mindset webinar in here, the third one that we're doing that series, if I miss Thursday. But let's keep our fingers crossed that my wife can go with him, and I don't need to go. But if it happens, I'll throw in a webinar in there. Okay, this is our blogs. Everything is available here. There's hundreds of blogs in here. Okay, the ones that I want to go over first is this gold outlook, the one I just talked about. Okay, so real quick, guys, I'm not going to go over everything on here because you guys can read it yourself, but I want you guys to take advantage of this. So this is the gold trade recap that I just showed you. So this was the bullish trend continuation in the demand zone re-entry strategy explained explained properly here. So here's the trade recap, which reviews the gold setup sent at 5:19 a.m. Eastern, outlining the market conditions, entry logic, risk management, and the reasoning behind the re-entry that ultimately reached the full TP. So by analyzing structure, what we talk about, demand zones, and liquidity behavior, this breakdown highlights how disciplined execution and trend alignment contributed to the success of this trade. Okay, so the overall market context leading into the New York session, gold was respecting a bullish structure, forming higher lows, that HL we talked about yesterday, and recovering from earlier corrective movement. Price was positioned inside a demand zone with strong rejection wicks. So remember what we talked about, the wicks, they get rejected at supporting areas in a bullish move, indicating active buyers and sustaining this momentum. The broader market flow showed consistent bullish impulses followed by shallow pullbacks, liquidity resting above previous intraday highs, and strong higher time frame momentum. Okay, so this is how the trade is broken down. So at 5:19 a.m. Eastern, you can see prior to 6 a.m., prior to the pre-New York, there was a long, which is in other words buy gold at 45.80 or 85, in around there, that $5 range, that 50-point range around there. Okay, with a suggested stop loss. If the trade meets requirements, we go in the trade. We give a good stop loss of 100 pips and a TP of 200. So it's looking for a 1 to 2 R&R. Okay, and this is now how the trade plays out. So you can see after about 25 minutes here, it's 5:43. The trade is starting to play out with some closing volume, moving up 30 pips. And then this is where, if you like, you can start to reduce risk. You don't have to go necessarily all to a break even, but from the 100 pip stop loss, you can go cut it in half and move it up 50 pips. You could go to a break even if you like. Everyone has different styles of trading and what they look for. Me as a scalper, I love looking for 30 pips. Sometimes that's my full TP. For others, that's just where they're getting started. Okay, so you will figure out what's best for you. You know, don't try and just copy someone. Figure out what's best for your trading style. That's what I want to get out of these calls, is to work with you guys and figure out what's best for you. Okay. So this chart shows the initial long entry at 520. The price pulled into the highlighted demand zone with a broader bullish trend. The shaded blue area marks anticipated expansion area or the profiting area, and price push approximately 50 pips upward before retracing to break even. Okay, but the break even is not necessarily that's it, trading is over. You could look for a possible retest or to enter again, as long as everything is still meeting requirements. Okay, so the first entry, break even hit. Second entry was re-entered at, again, 45.80. So as price revisited, you get a stronger push, maybe more volume. Maybe the next retest is the stronger leg. Okay, so you got to understand, not always the first time volume comes to the suggested area is the move. It might be the move before the bigger move, right? But that's why we're trying to teach you on these calls, is to stay with the volume, stay watching what the candlesticks are doing. This is not the time when you start scrolling on TikTok and forget what your job is as a trader. You should be watching bar by bar if you're trading on the 5 minutes, to see exactly what's going on. Understand the narrative of what's going on. Okay, so this zone showed clear signs of accumulation, including wick rejections and a liquidity sweep below the original 45.85 level. So that's adding a few confluences to take the trade. We see accumulation, wick rejections at these levels, suggesting that the buyers are there. And also you have a liquidity sweep, cleaning up all of the orders. Okay, so that makes for a bullish scenario. Okay, so making the re-entry valid. Okay, so this is the trade results right over here. You can see exactly how it came down there, initially pushed, then that's where it pushed down, came back up, and then you can see the retest, and then after the retest, you had the bigger volume-based leg and really taking off. Okay. So everything is in here, the risk used, the trade quality, and then a summary. Okay, so that's all available for you guys. That's why I highly recommend, guys, you join the free blog and everything like that. Join the free Telegram, because you get these links, and then you also get a breakdown of how we send out the trade signals, so you can get accustomed to these and learn with all of the the breakdown, okay? And now today's blog that I want to go into is this one right over here. It's the SST Trading Academy, Getting Started, Learning the Basics. This is session 2. So what we're going to do is we're going to continue off of yesterday. And if you weren't with us on yesterday's call, I highly recommend that you guys get caught up and you watch yesterday's session and then we move into like today's session. But I know everyone's got a busy life. Not everyone can join all of our lives. That's why they're available for you guys on YouTube, okay? And also the link of that for day 1 is right here. Here's the video link right over here. So you can literally read this blog and then it takes you right into session 1. But today we're continuing with session 2. So this is where I want everyone to make sure. I'll explain this in just a moment. I just want to, before I go into this, guys, thanks everyone for joining. Welcome everyone on Zoom. Sergio, welcome. Thank you for joining, brother. Justin, thank you for joining. Again, congratulations on your beautiful baby daughter. Thank you for joining. iPhone, siempre. Mirman Jess, welcome, bro. Conrad, welcome. Thank you, Sergio. I appreciate it. Timmy, welcome. Bruce, and welcome, guys. And also everyone on YouTube, thanks also for joining. Justin, thank you for joining. Ghost Boogie, thank you for joining, brother. You're in a gold buy, 60 pips, running stop loss at 20 pips, took 60% off. Proper trade, proper risk management. Ghost, that's respect, bro. I like that. You're up 60 pips, you're running, you're trailing, you lock in 20 pips and take 60% off. That's a beautiful trade. You know, I cannot say anything, nothing, no negative about that trade. Guys, anytime you take a trade, you get into the money, you secure some money, and you leave a runner with break even, it's a beautiful thing. You've taken care of the risk management, you took care of your pocket, you put some money in your pocket, and let the rest run at a good percentage that you're comfortable holding, right? And let's try and do that on a daily basis and keep compounding that account. One of the things that if I could look back years ago and say, what is one thing that I want to correct is I know it sounds pretty silly, but I left a lot of money on the table. I got into a lot of profitable trades, but then my greed took over and I wanted more. When I went up 60 pips, I didn't do anything. Then I wanted 100 pips. When I got it up to 100 pips, then my mind kept telling me 200 pips, and I would not take out anything because I thought it was going to continue going as high as it can go. And then all of a sudden, the trade came right back to where I entered. I pissed away a lot of unrealized profit, and some trades I didn't even have a break even, and then it went down and hit my stop loss. Think of how demoralizing that event is, where you're in a solid trade, it's going into profit, all of a sudden now you didn't do anything and it's coming back where you entered, and now you watched all of that money just disappear. And if you don't have a break even and you hit your stop loss, think about that emotional roller coaster, okay? So Boogie right there kind of avoided that. So excellent. Good job, brother. And also everyone else, Fodis, welcome. Good morning. Thank you for joining. Remy, good morning, guys. Okay. So as long as we're ready to learn, guys, hit the like button on YouTube. Hit the subscribe if you haven't already. We do help. It does help the channel, us here at SST grow. And also that subscribe helps invest in yourself, guys. Okay. Now, I just want to go over this blog because a lot of it pertains to what we did yesterday. Okay, so first thing, I hope everyone here tonight is here ready to learn and we're locked in, because I'm going to go over a few things, and each one of these things, if you're comfortable with this stuff and you got a good understanding, put a check mark beside it. If there's something that you're not sure about, put an X. And then at least this is the way when you're reviewing or you're learning, you know what you need to focus on. If you've got check marks and you understand the structure of a candlestick, I would not spend too much time on that because you might have it. But there could be, maybe you're having some difficulties with multiple candlestick patterns, identifying those. And then that's what you could be, spending more time and energy on in learning, okay? If that's how I learned, this is how I learn. I go over topics. If I have a good understanding of the topic, I put a check mark. If there's a topic that I need more work on or I'm not understanding, I put an X. And when I'm reviewing, I know what I have to tackle first. It's the X's. Then once I make all check marks, I go over everything and make sure I've learned everything. And if I feel comfortable where I can put a check mark against everything, then I'm ready to learn something new, okay? But guys, you don't want to learn keep learning and you still don't understand what's going on, or you're not correcting your mistakes, because you're going to just suffer in the long run. So in my opinion, when you make a mistake, be a man and just admit it. I fucked up, I screwed up, it's all good, life is still going on, but I need to fix it. Okay, I'm telling you this personally, with advice from me. I did not do this stuff when I started trading. I didn't even care to fix my mistakes, because all I wanted to do was just go into another trade and just try and make money. My mind was on money and it was not on anything about learning about the markets. And that's what destroyed me as a trader. So that's why I'm telling you guys, the education is key, and you fixing your mistakes early on will set you up for success later on. The more you fail or you're lazy at doing this, I'm telling you, you're just going to add more months and years on to figuring out trading. And we're trying to get it together for you guys where you don't have to spend years and years and years learning. We're trying to reduce your time and give you good quality information. And this is a win-win situation, okay? And it doesn't cost you guys anything either. Like, we're giving you real, raw value here, okay? For some of you guys that are learning, I respect it, but others that are trying hard, you got to try harder, okay? I know it might seem silly, me saying this. You guys might be already spending 2-3 hours learning and it's not clicking, but you're going to have to spend another hour to really put it together. But take your learning serious, okay? So number one, understanding price action. That's what we've been talking about yesterday and today, is price action. Price action is the king of all trading, okay? It tells you in real time where a bar opens, how low it went, how high it went, and how it closed. There's no indicator that can give you that type of information live. I'm sorry, guys. I love people that always want to debate that there's this indicator, there's this indicator out there that is better than price action. How is that indicator printed? The indicator prints after the bar closes. That's what's called, it's a nice indicator possibly, but it's lagging. It's lagging. You know what I mean? So when you learn how to read real-time price action, you are a leading indicator. You are the leading indicator. You don't need to buy any fancy indicators. You are now the leading indicator. Okay? And then just go with your gut and trust your analysis. If you're not over leveraging, then just be confident with what you're doing. Okay? Act like you are confident with what you're doing. If you're second guessing yourself, I can tell right away you're being hesitant and you should not be taking that trade. When I go in a trade, I have 100% confidence that I've done everything I've done to analyze that trade. And when I take it, if I hit the buy or sell button, I also know how much money I've already risked prior to taking the trade. I've already calculated my loss in my head prior to taking the trade. And if I'm okay with that loss, then I'm okay with the trade. Then the next thing to do is just follow the bars, follow the volume, exactly how we did yesterday, bar by bar, right? And then, okay, so price action. Understanding price action and candlesticks is fundamental for anyone getting started in trading at all levels, okay? Even if you have 30 years, you're still gonna have to be able to read candlesticks. Today might be your first day and you probably have no idea what I'm talking about, but I'm telling you, learn your candlesticks. It's the language of trading. When you understand this language, you will know exactly what the market is telling you. The market is talking to you. When the market prints bars, it's telling you information. It's just for you to interpret what this information is, what it's telling you, okay? And some traders understand it better than others. But I'm going to get you, I'm going to work my ass off here to make sure you guys are elite price action traders, okay? And if I don't make you an elite price action trader, I have failed you guys. I have failed as an uncle, and I failed as a coach, and I failed as a mentor, guys. And but that's not what I'm going to do. I'm not a failure in life, and this is not where I'm going to fail. I'm going to make sure every one of you guys understands this. But you have to promise me, you guys got to put 110% effort into this, okay? Because if you don't, I promise you, you're going to slack, and it's not going to be good, okay? So make sure you put the time in learning this, okay? And ask questions. If there's something that you're not sure about what I'm talking about, make sure now during these education you ask me a question, because when we go live next week in New York, And you're probably going to see how fast the markets are moving. So you got to understand what Dave and I are doing in New York. Okay, that's why we spend this time to make sure you understand this. Okay, so understanding price action in candlesticks is fundamental for anyone getting started in trading, as these concepts help traders analyze market behavior without relying heavily on indicators. Okay, sometimes the less indicators you have on the chart, now you're just with you and the price action. But indicators are fantastic as well. But add them and make sure you understand what these indicators mean and what they're telling you. I see a lot of you guys still are adding indicators on your charts and you still have no idea what they're telling you. So make sure you are 100% confident with the indicator you're using and what it's telling you. Okay. So let's talk about number one. Basics of price action. Okay, so price action refers to the movement of a asset's price plotted over time. It is a form of technical analysis devoid of indicators where traders make decisions based on recent and historical price movements. So when we're doing a top-down analysis, we're going on a higher time frame and we're looking at bars that have already printed, and we're analyzing those bars by identifying areas of support, areas of resistance. We're looking for supply zones, demand zones. We're looking for structural points of control, and we're stretching it into the future so that we can predict the next move with high probability. Okay, that's basically what trading is. You have to interpret what's already printed. You have to now analyze that and start to make your own analysis for a next move to come into the future. So I've learned over time by studying price action. To me, the best method is identifying areas of resistance, support, making them static lines, and adding, alerts at these locations. And also, if you figure out a zone, stretch that zone into the future, because you will see more than not, it plays itself out throughout the day. And the only thing that's variable is the volume. So the only thing that moves is the volume. Those zones will always be on your charts as those zones. Okay, if the volume is below a zone, then that zone is considered to be resistance, sellers, supply, red. If the volume is above a zone, that zone is considered to be support, demand, buyers, or green. Okay, and then sometimes we get in a zone where the volume is just trading like it's barcoding, where it's just trading in a very tight range, and then there we've identified an area of consolidation. Consolidation zone is another word of an accumulation where the market is in a range and it's just accumulating. Both buyers and sellers are accumulating for the next move. That's either going to redistribute to the upside if the buyers accumulate more, or back to the downside if the sellers accumulate more. Okay, and then if you can also identify a trend in the market, then you trade with that trend until that trend breaks. Unless, pay attention guys, unless you have counter trading skills and rules. Okay, I know when I'm counter trading a move or counter trading a trend, I'm not looking for the entire reversal of the entire trend. I might be just looking to buy and then cash out when it reaches that supply zone, because that's where it could be the sellers are waiting to push it back down and continue with the trend and make another lower high and make a new lower low in the market. Me as a counter trade trader, if I understand that I'm taking that, then I have no problem taking out profit at that physical area and not hoping and praying that it's going to continue to go. Because if it's trending, then the market is literally making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. There's no guesswork. Okay, there's no hoping and praying. Okay, make sure you guys have eliminated this style of trading. Don't be hoping and praying. Trade with a disciplined approach and be happy with your results. Okay, and I've never heard of a trader losing when they're taking money out of the markets. Okay, so be happy with that. Okay, don't be down on yourself. If you're taking out money, don't be upset. Okay, yes, you could have had a bigger move. Yes, trading all day is the what ifs, the woulda, shoulda, couldas, the what ifs, ands, or buts. I don't trade like that, okay? Because every single day is going to be a woulda, shoulda, I could have done this, why didn't I do that, this, that, and then all it's doing is creating noise in your mind, and you're gonna second guess yourself. You're gonna say, why didn't I do this? I should be doing this, and then again you're gonna get thrown off. Okay? I trade like a robot. I've told you guys this from day one. I have a very robotic, routine style of trading, and I trade the same way every single day. It's very boring, but it's repetitive and it's easy, and I can follow it every single day. Okay, that's how I kind of want to get you guys trading more robotic and taking out emotions out of the trading. Okay, so key concepts now regarding the basics of price action. Let's now make sure if you can place a check mark or an X. This is your job, okay? So can you guys now clearly, do you guys have a good understanding of support and resistance, okay? Very easy. Support is where your buyers are, resistance is where your sellers are. Think about your floor and your ceiling of your house. Your floor is your support and your ceiling is your resistance, right? And the only thing that's variable is me going up and down the stairs. If I go up, right now I'm in the basement, the floor is my support. And if I go up the stairs right now and I go above the ceiling, above the stairs, when I go to my main floor in my house, that ceiling now becomes support. The only thing variable is me moving up and down, right? Same thing with volume. Volume is the only thing moving up and down. The levels, the support and resistance remain the same. Just regarding the volume, will one be support? Will it turn to resistance? And if I stay on my main floor, that floor is support again. If I go up to now my bedroom, I got to go up another flight of stairs, again, above a ceiling, and then I'm on top of that ceiling. That ceiling now turns to support. It turns to the new floor above there, okay? So that's a silly way of trying to understand just some very simple support and resistance. And the only thing is variable is either the volume or yourself going up and down the stairs, okay? So levels where the price tends to stop and reverse. Another word for stop and reverse, make sure you guys understand when I say pivot, okay? You got to understand that because I say that word often. When we're trading live, if I say, guys, there's a pivot right there, you guys should understand that that's either a support or resistance level that we've identified, and it is a point of interest, okay? Because if it was a pivot at one point, it could be a pivot in the future, okay? Very simple, guys, very simple. Nothing complicated here, okay? Where did I leave off here? So support is where the price finds a floor, and resistance is where it hits a ceiling. Okay, if you got a good understanding about this, put a check mark beside this. Okay, if this is something you're still not sure about, put an X, and then you know that this is something that you need to work on. And we have 100 courses, webinars, tutorials regarding support and resistance. Okay, we got you covered on all of these things. I promise you that. Okay, trends. Okay, some of you guys now are learning about trends. We have a bullish trend, we have a bearish trend, and we have a sideways trend. So those are the three trends in the market. And then if we can identify what the trend is, try to the best of your ability to trade with the trend at all times. Okay, and then if you're counter trading the trend, make sure you understand and you have counter trading rules. Otherwise, continue trading with the trend. The trend is your friend until the end. Okay, the general direction in which the market is moving, okay? In a trending market. And also, guys, this is where you got to be very disciplined with your trading. If you see that the market, like so let's say for example tomorrow, let's say tomorrow's in a range and it's not trending, maybe tomorrow limit as many trades or limit your risk tomorrow. Maybe don't take as many trades in a ranging market because you might do a lot of mistakes and give back a lot of your profits. Maybe the next day, Thursday, will be like Wednesday's an accumulating day and Thursday is now a redistribution day, and it's much better to trade on a Thursday. Then that's where you can maybe hit your daily goal. So you can see you need to learn how to be selective as a trader as well. I always didn't understand this. I thought I had to trade 24 hours a day, all day, every day, Monday to Friday, nonstop. Then when I started learning to be selective with the days, learning from my journal, maybe Fridays are not my good trading days because I can see in the past I've made a lot of mistakes. I eliminated trading on Fridays, and believe it or not, I started to notice that I was becoming more consistent. I was earning more money in the markets just by eliminating one day and taking a day off. So you gotta know, guys, everyone knows these things about themselves because hopefully you guys are journaling. We have a trader in our group, and he realized Tuesday is his worst day trading. So he eliminated Tuesday, and now he's passing prop firm after prop firm after prop firm right now, just by learning from himself that Tuesday is a shitty day for him. And just had a conversation, just said, take a day off on Tuesday. It's not that hard. You know, the markets are open Wednesday, Thursday, and Friday. And when he started doing this, just something very simple like that, and he's really improved on his trading. Okay. So understand the markets are always open, guys. You need a day off. It's healthy to take a day off. Okay. Then are we going to trade today? No. Today is a live education. Okay, we're locked in. We're learning today. Okay, we'll trade in New York's. No issues there. Or join Dave in the New York sessions. Okay, but here we're locked and loaded, and we're learning. Okay, for those that want to learn, you're in the right spot. Okay, so where did I leave off here? Okay, trends. So the general direction in which the market is moving: upwards, bullish; downwards, bearish; or sideways, ranging. Okay. Check mark or X if you got a good understanding of this. Number 2, trend lines. Okay, so straight lines drawn to connect successive lows in uptrends or highs in downtrends that help in identifying the trend. We'll talk about how to set up trend lines either at the wicks, at the bodies. What points do I connect? I do a very simple approach. I connect one point from A to B, and then I extend the rest in the future. Right. So I don't play around with trend lines. Like, I don't second guess myself. I connect one point. Either it's a body to a body and I continue it, or it's a wick to a wick and I continue it. Okay. And there's trend lines and there's trend zones as well. So we'll talk all about that. Okay. So if you've got a good understanding, check mark. If you something that you need to work on, place an X. Okay, then you know what you have to review at a later time. Okay, and yesterday we did a little bit of an introduction to candlesticks. So candlesticks or bars are a way of displaying price information on a chart. So that's simply what it's doing. It's telling us the price of a security at a specific time, and we can break it down from higher time frames to lower time frames. They provide more information than line charts by showing 4 key prices. So if you use a line chart where it's just like an area chart where it's just showing a big graph with no candlesticks, then what it's lacking is a candlestick. A Japanese candlestick tells us 4 critical elements of it. So it tells us the opening price. It tells us if it has a wick, it tells us how high the price went. And if it's got a lower wick, it tells us how low the price went. And then finally, all candles have a closing price. So we get a lot of information in a candlestick. Okay, so all candlesticks also have a structure. We talked about this. They have a body, which is also known as the real body. So that contains the volume from the opening to the closing price. So it represents the range between the opening and the closing price. To me, when I see now, guys, I'm going to go off on the body. So this is when I figure out my point of control. I figure out the point of control from the opening and the closing price of a body. I don't figure out the point of control from the lower wick to the high wick. There's a reasoning behind that, okay? And I want to make myself clear. The reason why I do this is because, in my opinion, I believe that the body holds more information than just how high or how low it went. That's where the volume is contained, from where it opened and where it closed. And that's where I base all information off of. If I see that this is a structural candle, it's a big bullish engulfing candle, it's engulfed 5 candles behind, and it's 3-4 times bigger than the average candle, and it engulfed an entire structure and it closed strong, that's a candle I want to be analyzing. That's a candle I want to cut in half and figure out the point of control, because there could be still a lot of pending orders inside that volume that have not been executed. So now when the market pulls back into that point of control, that's where a lot of those pending orders are getting executed. And if it's trending and it's a big bullish move, I'm buying at a discounted pullback, and I'm buying the low where I'm realizing minimal to no drawdown, and then the next thing is it's going directly right into profit. Okay, so you have to be also patient and disciplined to wait for that volume to come into that point of control. It doesn't always come retest on the next candle. Sometimes it does, sometimes it doesn't. Sometimes it takes 5 bars before it comes in there. Some days it takes 10 bars. Some days it takes 20 bars before it comes in there. And notice how I said some days it takes 5 bars and some days it takes 10 bars. This relates to all traders. So if you're a 5-minute trader, the way how you interpret what I just said was, if you're a 5-minute trader like me, if I have to wait 5 bars, 5 times 5 is I'm waiting 25 minutes. If you are an hourly trader, and same, what I mean is when all candlesticks have the same characteristics, if you're an hourly trader and you're waiting for 5 bars, you're waiting literally for 5 hourly bars. So you're waiting 5 hours, okay? But you might be looking to hold that trade for a longer duration. Okay, so everyone has their time frames. You might be a daily trader and you're waiting for 5 daily bars, maybe one whole week before it retraces back into that point of control. Okay, so that's what I mean, guys. All candlesticks have the same characteristics. That's why it's one language. When I talk one language, I can talk to all of you guys at different styles of trading or time frames. Okay, so the body is very important. Also, we have wicks, or also known as shadows or tails on a candlestick. So they are the lines above and below the body indicating the highest and lowest prices during the period. But we also established yesterday that some candles do not have upper and lower wicks, right? They could open ignited. That's what we're talking about when I say an ignited open. If it opens ignited bullish, it's opening with a lot of buyers right at the opening price, and there's no pullback. There's no selling at the opening price, and it's bullish, and that's remaining ignited. And if it closes ignited, I know that it's closing directly right at the highest point, and it could continue with that momentum going into the next bar, where it could just open ignited and continue with that momentum. However, if there's a pullback off of that strong bullish ignited candle that closed near the high, that's a candle I'm identifying the 50%, the point of control. T-Boy, it's not clear. What's not clear? I'm trying to explain this as clearly as possible. Maybe I talk fast. Guys, am I talking too fast? Are you guys not understanding me? Let me know, guys, because I freestyle this. Okay, I assume you guys are following along with me. Some of you guys have not even made a comment or nothing. So I have no idea, guys. Are you guys sleeping? Are you guys learning? I got some shit to do in the garage. I got to put up some cabinets, and I got some gym equipment coming in the garage. If you guys are not interested in this, I got work to do. I can go on and do the stuff I got to do. But let me know, guys. Yes, talk to me, guys. We're having a conversation together. If you guys are good on everything, this is how I gotta know that you guys are following along, so I can go into more advanced topics. Okay, because I assume you guys know this stuff, and that's my bad, because I shouldn't assume that all of you guys know this stuff. That's why I'm trying to make it as clear as possible. Okay, by explaining all the different things that can happen. Okay, so wicks and shadows. We know that wicks are important, tells us how high and how low it went. Remember, the size of a wick matters. If it's a long wick compared to a short wick, remember the firecracker approach that I told you about. If it's got a short wick and the next candle opens ignited, remember the job of that next candle is to continue to fill that wick. And if it's a short wick, it could fill that wick fast and continue moving in a bullish momentum into the next wick, right? So that's why you got to understand, if it's got a big wick left behind, then I know that price was very bullish, but those sellers pushed it down, and it will take a lot of volume to continue to climb up that wick to go to the next wick. So exhaustion matters, of the understanding the size of the wicks, how if they're long or if they're shorter wicks. Okay, and we'll talk all about this in more detail when we go to the charts. Okay, color, don't get too caught up in the color. Okay, I see some of you guys are, do I use green for bullish? Do I use blue for bullish? Use whatever color you want. I do not care, right? I know if a price is opening and it goes up, I don't care what the color is. I know it's a bullish move. Okay, but we use blue candles to suggest bullish on our charts. Okay, for upward movement, the closing price is greater than the opening price, and vice versa. If it's bearish, some traders use red, but for emotions, maybe some traders don't like looking at red candles, because when they see a red candle and they're in the loss, emotionally they get affected by that. I don't give a shit about the color of the candles. I don't get emotionally involved in candle color. I don't even get emotionally involved when I'm trading, let alone the colors of the candles. Okay, so you could put any color candle on the chart. For me, doesn't matter, because I know what I'm looking at. I'm looking at the opening price, how high it went, how low it went. I'm looking for points of control. I'm looking to cut the bar in half. I could care less what the color is. Okay, I know some of you guys have some real fancy charts. God bless you guys. I used to use a black, chart, that's my go-to, is black backgrounds and red and green candles. I've been doing that for all of my life, but we kind of switched it up to the gray background with the blue and green to for our to match like the way how we teach SST and things like that. But colors, don't worry about it. Just get familiar and comfortable with what you guys like. Okay. Um, Candlestick patterns. So candlestick patterns are formations created by one or more candles that predict potential market movements. So that's what we're going to talk about on today's call. We're going to talk about candle patterns and learning pattern recognition. Okay, and because I'll talk quickly about some individual candlesticks I need you guys to be aware of. Okay, so they are essential for understanding market sentiment. When you can understand patterns, double bottoms, double tops, head and shoulder. You know, what is a flag? What is a continuation pattern? What are your reversal patterns? These should be pretty basic, and you guys should have a good understanding of these. Every time you see, your job as a trader is to spot these patterns, recognize these patterns. These patterns repeat themselves over and over and over every single day. So when you get familiar with a pattern and get more comfortable with it, that could be your go-to setup. That could be your A+ setup, because now you understand everything, the intricacies of that entire pattern, what you're looking for. Like if it's a double bottom, if it comes down, the first bounce is at a daily point of interest, a daily pivot on the 5 minutes. That's a good solid bounce, but it might be just the first bounce. As it goes up, the sellers are there and they reject that bounce back down. That's where now it's forming the neckline for the top of the W pattern. Now it comes back down to that double bottom again to that daily area. Now there could be more pending orders building up to buy again that pullback at that daily pivot level. And now if I see that they broke that level down and there's a big wick and it comes right back up and it closes above, now I know that there was a liquidity grab. There was a sweep of that low. That also strengthens my buy perspective. Now if I get a good solid double bottom, like maybe a big bullish engulfing candle printing off of that liquidity grab, then maybe I wait for one pullback to come into that next point of control and I'm ready to buy. I place my stop loss below that liquidity wick and I look to target minimum the resistance where the W and maybe to the next zone above. Okay, and that could be a setup that you look for on a daily basis. And when you see it, you're aware and you're familiar with this and you're confident at taking that trade, right? And then when you get confident with that one, then you're going to start to learn another pattern and you're going to get confident with that. Then you're going to know, as you get more experience, you're going to know which patterns to identify on a daily basis and which ones to avoid, because you're learning on the A+ setups, you're making more profits, you're realizing more gains on those, as opposed to just trading anything in the markets where you're journaling in and you're seeing that you're losing on those. So you're going to become very selective with what you're looking for as a trader, right? You want to look for quality. You don't want to just trade on quantity, right? You want quality, and when you have quality setups, then you're going to trade less. You're going to have less quantity trading, but you're going to have high quality trades, okay? And that's what we want to get you guys at, you know? If you take like 2 to 3 quality setups a day, and you're patiently and disciplined waiting for those. Why? You're not necessarily just staring at the charts all day, but maybe you've done a thorough top-down analysis, you've marked up some key higher time frame levels, and you've set some alerts, and you just naturally let the volume come to you, okay? And that's how you can be very disciplined in your trading, where you can go on and do your other things, right? If you got to wash the dishes, you know, the other day I was washing the dishes, and I had my laptop, I had everything set up, and I was washing the dishes when I got an alert, boom, 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 dry my clans, and I'm right back into trading, you know. But I got to do some things around the house too, you know. So this is a way how I used to do this while I was watching my kids when they were younger. I was doing my top-down analysis, taking the laptop upstairs, playing with my kids, playing Legos all day, playing Tetris with them, getting sharp on my Tetris skills while learning how to trade price action at the same time. So multitasking. A lot of us need to learn how to multitask, okay? Some of you guys are parents juggling all the kids and trying to trade at the same time. It's not easy. Believe me, I know how it is. So, but I can tell you that it can be done. Okay, you can juggle a lot of things. You can take care of the family. You can go to work every day. You can do all kinds of stuff. Okay, trading should not be overtaking your life. You should be able to balance trading with your overall life. Okay, that's when you're going to become a very consistent trader, when you can balance everything in life. Okay. So we're going to talk about candlestick patterns. We'll talk about single candlestick patterns. So your single bars are like a doji or spin top. That is telling us it indicates indecision or in the market. So it's 50-50. There's buyers and sellers, and it's virtually where it opens, it closes. Nothing is really moving. Nothing is really trending. We need to identify when the markets trade like this, because that's when you need to be on the sidelines and continue to watch. They're clues that maybe the market is setting up to reverse or continue in its direction. Okay, so both opening and closing prices are very close, with a very thin body. So that's not, you can't even analyze that candle. You can't even figure out a point of control. There's nothing you can do with that information. So those are the candles you just gotta let print and just continue waiting for a bigger body candle or an engulfing or something like that. Okay, so we'll talk about dojis and spin tops. They are indecision candles. They're basically coin flips. I don't like betting on coin flips. I like putting my money in if I know it's an A plus setup, because I know that those are 70, 80, 90% success rate. Okay, I don't want to be betting or trading when it's consolidating. That's basically a 50-50. I don't like those odds of 50-50. Okay, I like odds of 80 plus or above with proper risk management. If you can identify those, you're going to do good for a long time in trading. Okay, another candlestick you should be aware of is a hammer. Okay, we'll talk about those when we go to the chart. So that's a bullish reversal pattern. So it was a hammer candle, was a bearish candle. It was very bearish. It had a big bearish body coming down, but maybe it spiked into a daily supporting area. It pivoted out of there, it executed all those orders. Then all those buy orders got hit, and now it's reversing back up, and then it closes at the high. That's what creates now the black candle turning to a green body candle, closing at the high. It literally looks like a hammer with a handle, and the wick is the handle, and the head of the bar is the hammerhead. And this is our second most bullish candle we have, and it's suggesting that we could have a market reversal. So if we can understand and how to interpret a hammer candle and the way how it forms, then you can get ready to maybe anticipate a possible buy opportunity. Okay, and the hammer, if you see it, listen to me guys, if you see a hammer that's created in a range or consolidation, it means nothing. Okay, yes, it does mean something, but what I mean is we don't trade off of that hammer, okay, because it's just in that consolidating range. You want to trade hammers that reject off of supporting high quality support pivot areas or higher time frame points of control. Okay, so that's the key characteristic that you need to learn. Very important, guys. I'll state it again, okay? Because this is not scripted. This is just coming off the top of my brain, and I'm thinking about it right now as I'm talking. If a hammer is, like, let's see, if I show you the charts right now. Let's see, a range. Let's see if I can, I hate when I gotta kind of look for something and it doesn't happen naturally, but like, for example, if a hammer was created in this range, okay, you see these shitty candles right here? You see how they're not doing anything? They're just going up, down, up, down. Even if a hammer gets created in here, I would not pay too much particular attention to it. I would look for hammers that kind of build off of key critical supporting areas, like big pivots. Okay, when it happens naturally, you'll understand what I'm saying. When I have to look for this, it doesn't happen. Hopefully when we get to the charts, we'll identify one. Okay, so that's a key characteristic for all candles. Okay, for all candles. Even if you see a bullish engulfing candle in a range, it's not as effective as if it was built at a higher time frame area of support. And when we get into looking at the charts, hopefully we'll spot one of those. Okay. Next one is a shooting star. This is your opposite candle to a hammer. All candles have an opposing candle. Okay. The way how I learned this is the bullish candles are the brothers. It's a family of candlesticks, all bullish. We have bullish engulfing, we have a hammer, we have a harami, we have a spin top, we have a bullish pin bar, and we have an inverted hammer. And then you have those dragonflies. Those are basically the family of your bullish candlesticks. And you got to learn that family. because you're going to see it every single day, just like you see your own family, just like you see your wife, your husband, and your kids. These are going to become your kids too. So get to know which ones are your favorite candlesticks, okay? Because you're going to see them every single day. Some of you guys, you might see them more than you see your actual kids because you're glued into the charts all day. So I understand how that is, believe me. Um, so um, and in the opposing family is the bearish family. So you got opposite to your bullish engulfing, you have your bearish engulfing. Opposite to the hammer, you have a shooting star. Opposite to the bearish bullish harami, you have the bearish harami. Opposite to the inverted hammer, you have the hanging man candle. And opposite to the bullish pin bar, you have the bearish pin bar. Opposite to the dragonfly, you have the gravestone doji. Okay, so as long as you know the brother has a sister candle. Okay, that's how I learned this stuff. So I don't know why I learned it like that. God knows, but that's how I learned it. Someone asked me, Ron, can you teach me trading the way exactly how you learned it? And that's exactly what I'm doing. Okay, so I know it might sound stupid, but whatever, it works and I make money off of it. So let's continue it. Okay, so the shooting star candle, it was a bullish candle. At one point before it closed was very bullish. Then maybe it hit an area of resistance, or it found sellers, it found the offers, and they rejected that big bullish candle back down, and it flipped the opening bullish price, and now the candle flipped black. It's got a black head on it, and it's got a long upper wick. So it looks exactly like the opposite of a hammer candle, but it closes at the lowest point, suggesting that the sellers are in full control after they rejected that big move. So it's suggesting that the next candle with that momentum could continue further pushing down. And that could be where you look to for a sell setup. It could be what starts those FU candles. This is how they start. It's a big bullish candle, then it gets rejected hard and it leaves behind a massive upper wick, and then it closes at the lowest point where it's closed at the bottom with no lower wick. So the next candle, if it opens ignited bearish, it wants to push down. Even if the next candle opens bullish, let it come up, because it's got to remember, it's got to come up that big upper wick. It's got a long distance to go up. If it gets rejected off of that wick, you know that the sellers are there and they're pushing it back down. I know, guys, the way how I'm explaining it, but you got to interpret it on a chart. I'll show you guys when you see it, but sometimes I like explaining things where we're not just looking at the charts, because I know the charts are moving and you guys are just going to be looking for trades and you're not paying attention to what I'm saying. So sometimes this is why I do this with these blogs, to get your eyes off of the chart, because I know when we go there, all you guys are going to be asking me, Ron, do we buy or do we sell? And that's not what I'm doing tonight. I really want you guys to learn this stuff. Yeah, Yasin, what does harami mean? It's not Arabi like haram, but what Yasin, what harami means? It's a Japanese word. Okay, I know it sounds Arabic too, but it's a Japanese word meaning pregnant. Okay, so the way how the Japanese interpreted this, they see a big bullish candle, and if you have it where it closes at the high and then they have a gap down candle, sometimes you'll see candles gap down and they open inside that big bullish body and it's trading inside there. And that's, the Japanese said, that's like the mother with the baby in the belly. Guys, I'm not Japanese, but I've studied the Japanese candlesticks, so I know what I'm talking about. You can, if there's any Japanese on the anyone that speaks Japanese on the call, maybe you can verify with me if Ron knows what he's talking about. But it is meaning pregnant. And when you see it on a chart, like sometimes when you see, let me show you, like I'll show you right here. So you see this big bullish candle. Okay, this one transitioned with an open and continue. But sometimes there might be news, and where it closes up there, you'll see a bearish candle open down here. Okay, I'll try and make it red so you can see here. Okay, imagine that the closing price was up here, and then it opened down here. And then it came down, and then that 5-minute candle closed in there. So you see what I mean? It looks like the mother here with the baby inside the belly. That's what a harami is. And a harami is suggesting that the market might be reversing. So you see how it closed up here and then they opened it down here. So the sellers are kind of trading down in here. So it's kind of suggesting that there could be a market sentiment change and we could be going down bearish. So if we identify this is the harami, the baby in the mother's belly, it could be signaling that the direction or the momentum could be switching direction. Okay, so See, guys, on the fly, I can answer your questions and explain these properly, but I love interaction. So, Yasin, thank you for that question. But hopefully, I broke it down for you guys. Okay. So where did we leave off right over here? So we talked about the shooting star. These are our individual candlesticks. Okay. Then you have multiple candlestick patterns. Make sure you guys understand these. Okay. Engulfing pattern. Okay, so you have a large candle that engulfs the previous candle. Okay, so it's a big candle that engulfs a previous candle. Okay, and it's suggesting that it kind of swallowed all of that volume and it wants to continue in that direction. Okay, so those are good candles to identify. Engulfing candles. That's your most basic candlestick pattern to identify to get started as a trader. Okay, so engulfing patterns. A large candle engulfs the previous bar. It's kind of like Pac-Man eating those pellets, eating them, engulfing them, swallowing them. So a bullish engulfing pattern indicates a potential upward reversal, and a bearish engulfing suggests a possible downward reversal. We have morning star and evening star patterns. These are 3-bar patterns where you have a bullish bar, and then you have a small indecision doji at the top. That's your evening star. And then you have a big bearish engulfing candle coming down. And that's suggesting that the bullish momentum is ending and now it's time to reverse and we should be selling the markets. The opposite of a morning, the evening star is a morning star. The Japanese coined this the morning star because in a morning when it's bleak in the morning and then now the sun is rising, the sun is coming up, it's giving them hope that it's going to be a beautiful day, it's going to be a nice sunny day, and you know, you're optimistic on a sunny day. It's like me too. Right now it's cold and it's shitty out here, the weather in Canada. When I see the sun coming up, I get excited, I love it, I'm in a better mood. So that's how you got to consider what is the morning star pattern. The morning star pattern is a big bearish candle coming down, maybe it gets to a nice supporting area, then you have a small indecision bar that's built at the bottom. That's your star. That's giving you the hope that the sun is coming up. And then if you have their third bar, that is a bullish engulfing bar, now we're ready to maybe anticipate that the selling momentum, that bleak market is ending, and now we're optimistic that we're going to start a bullish trend and the sun is coming up. So that's how it was defined by the Japanese when you study these candlesticks, guys. Yeah, the Candlestick Bible is what I used to study at a young age, and it's legit, guys. It's for real. Study your candlesticks, okay? Because you'll understand what's developing. You'll understand the story that's happening, right? You can make the narrative in your head, and then you feel confident with taking the trade. If I see like a morning star pattern developing, I don't want to be selling the markets anymore because I can anticipate that it's ending, that now the market could be reversing in a bullish direction, and maybe this is the start of the reversal, and I want to be a buyer because I could literally be buying the bottom of the move or the start of the move, right? And then that's when you can literally nail the candles like a sniper at those early entries. You are not only just learning how to snipe candlesticks or like zones, but you're also learning how to realize minimal drawdown. Imagine when you get really good at trading and you patiently wait for these trades to come to you and you're nailing them with high probability and you're having success, you're realizing minimal drawdown. And some of you guys, you take these trades and go directly right into profit. Then the next thing you got to do as a trader is just start managing your risk, eliminate your emotions by going to a break even, taking some profit out while you're learning along the way. You're growing your capital in your account. You're getting more confident as a trader, and we're going to continue learning and learning every single day. And then you might see this pattern again next week, and you're going to say, holy shit, I remember Ron talking about this morning star pattern. Now I see it developing again. And then you're going to say, I'm going to add this to my playbook. I'm going to add this to the list of my patterns that I identify, I recognize, and I know when I recognize this, it's got a high probability that could be a bullish reversal pattern, okay? And you're going to start to see these things. When you identify them, you're going to get better and better and better at noticing these things on a daily basis, okay? And then we talked about the Harami right there. Okay, and analyzing market context. So real quickly, understanding patterns requires analyzing them in context, okay? There's always context behind something. If someone says something to you, are they providing context behind that statement, or are they just talking out of their ass? Like, it's kind of like Donald Trump. A lot of times he just talks to hear himself talk, and there's no context behind what he's saying, okay? Like right now he's trying to criminally charge Powell. You literally cannot do that. Okay, like those are facts spoken from a lawyer. There was a lawyer who was on the news and saying you literally cannot do that. The Federal Reserve is out of a jurisdiction, out of the government. It's its own separate entity, and the president cannot initiate criminal charges against the. It's never been done in the history of the Fed Reserve. So maybe this might be the first we're witnessing. God knows, okay? But you gotta, when you talk, you gotta have context behind something. So when you're trading, you gotta have context behind it. Why is it doing a Morningstar reversal where the market has came down at around 2 p.m. and now it's got FOMC is upcoming? Like, just play that in your head. The market is selling to an anticipated higher time frame daily level. We've got FOMC coming up. Powell might be lowering interest rates. That might be bullish for the market. It's already came down to a discounted level. And then you see big buyers getting executed down there. And then you see a big, huge bullish move coming out of FOMC. Sometimes you see that. When you play the narrative out, also, guys, this is why back testing is important. If there was something big or news announcement, or you want to learn how to trade Wall Street market open on a daily basis, or you want to learn how to trade the 8 a.m. COMEX 8:30 news to 9 a.m. setup every single day, that's what you need to be learning. Go to every single day, Monday, Tuesday, Wednesday, Thursday, Friday, and study the 8 a.m. to the 9 a.m. move. You might literally see this. The market might be making a high prior to 8 a.m. Then it starts to sell down at 8:20. It kind of consolidates. That's kind of where COMEX market opens up. Then you might have some U.S. news coming out. It might be positive. So this is your pullback, and the market is coming to a discounted area. Once they announce that news, boom, it's ready to blow out of there and continue a higher low and trade breaking through resistance. So news kind of plays in with how the volume is moving, right? Because insiders know the news before it's released. Let's be all honest with each other, guys. Let's not be like naive to the fact that you don't think market makers have a heads up prior to releasing news. Come on. It's us crazy traders that are gambling and trading on the news and hoping like we're playing roulette every single day. I'm sure that the market makers have a good understanding or indication where the markets are going to move prior to the news, because it could be already baked in. They've already accumulated, and now it's ready to redistribute all of that onto who? Onto us. Us retail traders are their liquidity. Anytime we're getting stopped out and we're full tilting our trades, we're just donating all of our money to the financial institutions, the brokers, the market makers, the big billionaires, and you and I are left scratching our heads saying, what the hell is going on? Well, this is how the markets move. So you got to learn right now. So guys, don't get in the habit of blaming the markets. It's just like, you can just blame the markets and say this and say that about it, but you got to learn how to move with these markets. At the end of the day, we all know that the markets are manipulated. It's no secret, okay? But we have to learn how to move with this manipulation. Otherwise, we're going to get left behind. So study what they do. They engineer the moves. They're going to move the markets regardless. If I'm trading or you're trading or we're on the sidelines, guess what? The market is still moving up and down and sideways. It doesn't give a shit if we're in the market or not, okay? If you didn't even trade today, guess what? The markets were moving today without you, okay? So you're not going to stop the markets. The markets are going to continue moving. They're going to make big moves. So you see there's manipulation when you're trading. There's manipulation when you're not trading. Learn how the markets are moving and trade with proper risk management. That's it. That's the secret to trading right there. And then volume, okay? So volume is very critical. Some of you guys are using volume profiles, volume bars, volume indicators, anything to do with volume, depth of market analysis. You got level 3, level 4. You have maybe footprint charts, anything indicating volume or delta. It's good to learn this as well. Okay, you can combine this with your price action skills and have it beside your candlesticks. You can read a candlestick, you can know the open, high, low, close, you can determine points of control, and you can see when it comes down to these points of control, is it trading at high volume? Because that could indicate that's where a lot of those pending orders are getting executed. If you see that the volume is very thin at the wicks, then guess what? It's telling you something. When it reaches that range, that high, that low, that's why it's not best to trade up there, because it's trading on thin volume. Look at your profile charts. You'll see like a lot of the points of control hold where it's got the value area of the volume. If you see at the highest range, at the wicks, at the highs and the lows, you'll see that the volume is starting to thin out up there, because that's it. It's the exhaustion phase. You want to trade where the bulk of the volume is trading, and those are in your points of control, okay? Market phases, identifying if the market is trending or ranging aids in selecting the appropriate strategy. So am I trading with the trend? Am I going against the trend? Do I have counter trading rules? Is the market ranging? Is it sideways? Am I consolidating? Am I waiting? All of these things play into that. So you have to know how the markets are moving. Finally, timeframes. Using multiple timeframes helps in validating signals and gaining broader market perspective. So in other words, we do a top-down analysis. We start off on a higher time frame. When I'm doing intraday trading or scalping, I feel that starting off at the daily is more than enough. It's sufficient. I can start off on the daily, then I move into the hourly, then I move into finally the minutes, whether it's the 15-minute, 5-minute, or 1-minute. If I'm a swing trader, I would not be concerned about the 1-minute, 5-minute, 15-minute candles. I would not even be looking at these. I would be concerned if I'm swing trading, looking to hold trades for multiple days. I need to go even above the daily. So I would start my top-down analysis possibly at the monthly and work down to the weekly, get down to the daily, and trade the 4H candles off of these zones. Okay, that's in a nutshell. If you're a swing trader or you're an intraday slash scalper, those are how you should start from the higher time frames, in my opinion. Okay, again, a scalper might say to me, Ron, well, I do my top down analysis from the monthly, weekly, daily, 4 hour, get it? Well, you're absolutely correct. That's fine too. You're just getting more and more analysis at higher time frames, okay? But just make sure when you're finding a monthly supply zone, if you don't know the color, if you don't color coordinate it like me, maybe just write on your chart that this is a monthly zone. So, because if the volume is reaching up there and it's just coming up to a zone, you might be unsure because you maybe marked this zone 2 weeks ago. So just right there in your zone with TradingView, you can use the text and just for a reminder that that's like a monthly supply zone. Okay. Guys, so practice in journaling. We'll do separate classes on all of this. I hope you guys are still, practicing in the markets. I hope you guys are journaling. Honestly, I hope you guys are doing this. You're recording. You'll learn a lot about yourself, your good trades, your bad trades, what you need to improve on. You'll learn so much about yourself. If you don't do this, you're going to fail to, you're going to possibly, I know you might want to, it sucks hearing this, but you're possibly going to do the same shit over and over and over. If you keep losing, and you're not learning from it, you're possibly, I'm telling you, you're going to continue to lose next week and the week after because you're probably going to do the same bad habits over and over and over. And then you're just going to get pissed off. You're going to say the markets are rigged. The market makers are doing this. The market makers are doing that. No, the markets are moving regardless. You are the one that's trading reckless. You are the reckless trader. Unfortunately, you need to clean up that style of trading. Okay. Take it from me. I used to trade like that and it got me nowhere. It wasted my time, years. It wasted my money, up to $50,000 lost into the markets where I had no idea what I was doing, trading reckless and not learning. It's a recipe for disaster. I hope you guys don't go down that path because it's not good. It takes years and years and years to recover, if you ever do, to get out of that. And believe me, mindset is very powerful. So teach your mindset what it needs to learn about these markets. So journaling. I know a lot of people say, Ron, journaling's gay. It's this, it's that. Journaling is very, very important. And you don't have to have a crazy, crazy journaling approach. You don't have to have everything like I do it old school. Old school, guys. I got a piece of paper. I don't even use a pen. I use a pencil. That's how ghetto I am. I use a pencil with a piece of paper, and it's got a little orange eraser at the top, like I'm in grade 3, and I just write date. Today I took a trade on January 13th. What time? It was 6 a.m. Eastern, New York session. What security was I trading? I was trading US 30. What time frame did I take the trade off of? I took it off of a 5-minute candle. What was the setup I was looking for? I took the double bottom. I took the second buy. There was a liquidity sweep and it was setup rating. It was my A plus setup. What were the results of the trade? Did it hit TP? Did it hit stop loss? What did I do during the trade? Did I take out partials? All of this should be you're breaking your trade down and overall, did you learn from it? And that's how you go on. And maybe include from TradingView, copy and paste the chart link so that you can go and review it at a later time if you guys are using those fancy Excel things. I used to draw on a piece of paper, I used to draw the candlesticks. I used to literally draw the double bottom. I would circle the candle that I bought off of, and that's how I still kind of do things like that. Unfortunately, I hate technology. I hate computers. I hate Excel. It's not for me. I hate that shit. I get more aggravated and frustrated with those things than I do trading. So yeah, that's how old I am, guys. A piece of paper and a pencil. But I know you guys are much smarter than me. You guys use your Excel. You guys do all this. When I see your guys journaling, I'm blown. I'm like, please, can you guys teach me this so your aunt can learn this and get better at this? Okay, so. Guys, take time in doing your journaling. It will pay off in dividends in the future. Okay, literally, that's a pun. It will pay off in dividends. Dividends are reoccurring payments every quarter from as a shareholder perspective in the stock market. So if you do your journaling, literally it will pay off in dividends in your trading education. Okay, backtesting. Some of you guys are still not utilizing the backtesting tool. It's fantastic on TradingView. Like right here, if I want to backtest, you see this big bearish candle? I can go all the way back. Let's see, right here, I cut it. See, now I can start to look, I can start to play around. Now at that big bearish candle, okay, I see that. That's a candle I want to analyze. There's my, I'm using my Fibonacci tool. There's where I'm cutting it in half. There is, let me just make it nice and colorful for you guys. There's the halfway point. Can I find the bearish point of control of this candle? Absolutely. Ron taught me how to do it like this. Stretch it into the future. Now what I can do is I can play out an individual bar. So what am I assuming? I'm assuming that it's going to come back into the point of control, and I'm assuming it's going to stay respected in there and go back down. Okay, this is ideally what I want to see happen. Come back in that point of control. It's trending down. It's trending down over here. It's coming down. It went back up. See the resistance right around here? It's going back down for the next leg up. So maybe it's going to continue to follow in here and go back down. However, maybe if I'm learning, maybe that's not the case. Maybe it's now time it's going to close above. If it closes above, I want to flip the zone and see if it will respect this, because maybe it's going to move up there. Now I play out the bars. I can go just bar by bar. Just I can see what prints there. There's the blue candle. So you see right there, if I stop it, see right there, where the hell is the pause on this thing? Oh shit, okay, I just played it all out. But if I went bar by bar, you see how it came right in the red box? It got the wick and ran back down. As it came down, it still held above 50% of that bar. Then it officially closed above. So that's where I would be, now figuring out that point of control and making it green. Okay, again, I'm just doing this off of the time frame right here. This was the end of the day trading. This was going into 3:30 right at 4 p.m. So it's not ideally, this is not the time I'm trading, but this is how you can still backtest. Does it still hold up this zone? Yes, it does. Okay, can I stretch it into the future? Now I still have those zones. What happens tonight if it comes, like down in here? Will it respect this? Will it go back up? Will it close below here, turn red, and then will it go back down? And this is how I can backtest and learn off of all of this. Okay, and when you're all done backtesting, you can get rid of this and just go back to looking at the candlesticks. Okay, get rid of it, leave, and there we go. So I can see that it continued to move bullish off of that. And you see how it kind of built, inverted, held, and continued to move up. Okay. So we talked about backtesting. So analyze historical data to see how understanding of price action would have worked in the past. I like to do backtesting on the weekends when I'm bored. I go in there and I do some backtesting. That's how you continuously learn. Demo trading, very important, guys. Anytime you're learning a new strategy, instead of just going in the market while you're learning something new and using your own real money, maybe just open up a demo account, but treat it like it's a real account. If you open up a $10,000 demo account, don't just go all in and trade, because you're going to learn bad habits and then you're going to relay that to your live trading. If I open up a demo account, I'm gonna tell myself this is real money. If it's 50,000, I'm gonna pretend that this is real $50,000. I'm gonna set myself with 0.5% risk. If I lose, that's it. My day is over trading. I gotta go now and learn from that demo account. I gotta backtest. I gotta see. So you can literally, if I was trading today and was my first day, I would be telling you, do not put any money in the markets. Open up a demo account. It's free. And take a month or two to learn how to trade. while you're learning, you're not losing any money. You could be continuing to work and build your paychecks going into your trading account. So after you learn, after 2, 3 months, 6 months, 1 year, now you got $10,000, $20,000 saved in your trading account, and you're ready to rock and roll with using knowledge, and now you're ready to start compounding. That's how I wish I started. That's how I wish. When I look back, I hope someone would, I pray that someone would have taught me that style of trading. Someone taught me, put all your money in, you're going to get rich quick, buy these penny shit stocks, you're going to be a millionaire overnight. That's what I thought, and I just pissed away a lot of money. Okay, so don't do what I do. Okay, that's not how you want to learn how to trade. And your trading journal, we talked about that. Document your trades, identify your strengths, your weaknesses, and areas of improvement. Finally, examples, support and resistance, candlestick patterns. We'll look at the charts. So number one, by mastering these things, so make sure you put a check mark for number one, basics of price action. Introduction to candlesticks. Do you know your structure? Are you familiar with your single, your multiple body patterns? Are you okay with your journaling, or does maybe your journaling is an X? That's something you need to improve on as we go along. But whether you're a beginner or you're an advanced trader, you can develop a strong foundation in trading through price action and candlestick analysis, leading to making more informed decisions in the markets and strategize your trading plan. Okay, and then over here, guys, I provided the link to our day one class. It's right over here. So on that blog, you can click on here, and that was our intro class of the things that we talked about. It was approximately 2-hour class, and it was really informative. We talked about a lot of things. Okay, so I'm going to now just move over into today's. So what we're going to talk about first off is, anyone in Zoom have any questions about what we talked about yesterday? Is there anything I can clarify that you're not sure about before we move on? Do you guys have any questions? Anyone on YouTube? If you were with us yesterday, are you guys unsure about anything? Do you guys have any questions? Okay, because what I'm going to move on to now is a top-down analysis. Now we're going to put together everything that we learned yesterday, and now we're going to do a top-down analysis. I'm going to take my time. I'm going to do a thorough, nice 15-minute analysis to get you guys understanding why I start my analysis from the higher time frames and move it down. And I'll show you how I color coordinate my chart, the way how I do it. Okay, so if yesterday was all good, Kraken, any chance you can talk about whiplashes, whipsaw that happen and what caused it? So a whiplash or a whipsaw in the market is possibly news driven, something that caused extreme volatility where the market just kind of dumped, and like right here. Here's kind of, I know I'm just cherry picking right now to look for one, but this to me looks like maybe a whipsaw. Like, you see how the market was just kind of trading blue, black, blue, black, little blue, black, and then all of a sudden this huge candle. Look at the time, okay? So 6 p.m. This is a daily candle open, so you can see the whipsaw action. If you just waited for this candle to close, you possibly could have saw what was going on. So you see how it came up bullish, bullish, bullish. Again, when it comes up there, when I was learning, I would always mark the high like that, okay? So you can see it came up as high as 4606. Now what I would do is I would just go backwards and analyze what did it do when it came up there. So now I can see that there was previous highs right there. You see how there's a wick, a wick, a wick, a wick, and a wick, and a wick. So that's resistance. And now what's above resistance? Liquidity, right? There's pending orders above there. So now this makes a lot of sense to me. The market opened to fake out buyers. Okay, as the market, look how they let them in, 450, the close of the candle, then short wick, they opened it, it was bullish, it did its job, it filled that wick, it popped, it continued to backfill these wicks. If I was scalping that candle, sometimes guys, that's a 90 pip move, 90, almost 100 pips. Okay, so if you bought that candle, you got to see what you're driving into. You're driving right into this little range right here. Okay, I can mark it with a consolidated. See, I'm just cherry picking, but if I did my analysis, I would have possibly identified this. Okay, but I'm just showing you what a whipsaw candle is. So this is a whipsaw, in other words, an FU candle, where it came up bullish, bullish, bullish. It was amazing candle, 90 pips. But again, if you don't do anything and fail to realize that it's taking out that high and you don't do anything, look at what literally can happen. And this is demoralizing. Remember, this could be your first trade of the day, and look at that what could happen to you. Your whole mindset could be ruined. If you don't do anything, that's why sometimes when it's moving up 30, 40, 50 pips, at least take your stop loss and go to a break even to avoid this shit from happening. Okay. Worst case scenario is it's a break even. I'm okay with a break even. Okay. I look at break evens as a successful trade. Call me crazy. That's what a lot of people call me. I don't care. But at the end of the day, I did not lose any of my money. That's more important than calling me crazy. You guys can call me crazy all day. I don't give a shit. At the end of the day, I got to look at my accounts. As long as there's money in there, I'm happy. So break even for me personally is a win. For some people, they see it as a loss. That's okay. I'm not here to argue you. But for me, my mindset, I had to teach myself that a win is a win, a break even is a win, and a loss is a learning opportunity. Let me say that again, because some of you guys are sleeping. I can see you guys on Zoom. A profitable trade is a W. A profitable trade is a win. A profitable, even taking partials, is a W. It's a win. Okay. A break even for me is a win. It's a win. If I took the trade in and went right up to profit like this, and I took my stop loss and I went to break even and it went up and it came down and I didn't win anything, it was a break even, I still consider it a W. Also, if I take a trade and it goes in drawdown and now it comes back up to break even and I've had enough of this trade and I kind of want to go for a walk, I didn't win, I didn't lose, I was in drawdown, but it came back to break even and I closed that trade, I did not win and I didn't lose, to me, it's a win. Why? Because I've learned how to walk away. I've learned how to go and recover from that. Even though I was in drawdown, I got back to break even and I closed the trade out. I need to, maybe I need to cool off. That's a W. Psychologically, it's a win. I didn't win, I didn't lose. I treat it as a W. However, if I do take a trade and it goes against me and I do realize it hitting my stop loss, when it hits my stop loss, I've already predetermined my risk prior to taking the trade. So technically it's still a win, but I know it goes against you as a loss in your journal. But I also look at it as a win because I didn't over leverage my account. I didn't blow up my account. Maybe I lost 0.25%. I can still recover from that, but technically it's still a loss. Okay. But what I look at it is, this is what I have like maybe above a next trader is. I have maybe a better mindset. It's not that I'm a better trader than you. Maybe I've just learned a better mindset. And when I take a loss, it's a learning opportunity. It's the tuition paid to learn from the markets. Like just buying a course. It's like buying a textbook if you go to university. It's like buying anything. So it costs you money. If I lost $100 on that trade, I have to go back now and I got to physically learn why did I lose and learn from it, because I've already donated $100 to the market. That's my tuition cost. I got to go back and learn from it. Otherwise, you're just donating money to the markets. Okay. So if you lose, consider it a lesson and learn from it. Consider it tuition paid to get better as a trader. Just like if you were going to school, you got to pay tuition at school. You got to pay your books. You got to pay for your courses and things like that. So same thing with trading. This is you paying your dues to learn. But so this is going off on the whipsaw. They took out the liquidity. Look how they smacked it down. That is almost a shooting star candle, but technically, I'm a very technical trader. A shooting star has to close at the lowest point with no wick. That has a little tiny wick, so I know it came down, and right at the end, I hit a pending order of buyers. But it closed 99% near the low. As soon as it opened up, look, it tested 50%. Even of that small body, when you cut that body in half, there's 50%. And look at it, retested it, the point of control of that volume. After that massive rejection wick that took out that liquidity right here of these previous highs. So that's the big, I would consider it shooting star candle / bearish pin bar / fuck you candle, all of those. And now when I see that, I want to feed off of that momentum. So, like when you see it open up and then it gets rejected there, first thing I'm doing as a scalper is, I don't know about you, but I'm hitting the sell button. And my stop loss, if I really want to go with a big stop loss, because I know that's like a 100 pip candle, or I could go just 50% up on the wick. Guys, I even measure the wicks, right? But I could also look at the past black candle right there, that one right there. Maybe I just want to keep my stop loss above that previous high wick right there, okay? And if that's good enough risk, what am I targeting? Minimum to take out the previous low and maybe a little lower, okay? And that could be literally half your daily goal or your daily goal. Like just those two candles, that's almost 190, 200 pips. Let's say you didn't get the whole move, but maybe down there's 100 pips. Maybe down there's 75. At least maybe now you're taking some partials out and you're at a break even. You could be literally doing that, taking out partials, getting your stop loss to a break even. And you see, if you do fuck all, look at what happens. Okay. And this is demoralizing. If you took that, oh my God, that was a trade with zero drawdown. It went down to approximately almost 200 pips. And you want more, you want 300, you want 400 pips. You know, when the greed takes over, look at what the market does to you. Look at this shit. Comes all the way back up to maybe possibly where you entered and negated everything. Okay, and maybe you get excited. There's the buy candle, and then you see this one open, and you take a buy now. You're pissed off. You just pissed away all that money. Now you want, oh my God, the market came back up. I see it's a buy, and then look at what you do. You buy to take it to fill that wick and come back up here, and look at what the market does to you now. Now it comes down and hits your stop loss. So you see the momentum swing. You see the emotional roller coaster where you could have potentially taken a solid trade. You could have taken some partials, went to break even. Maybe greed came in. It came back. Look at how the market, this is like back testing. See how it came back to entry point to stop out all of these traders. And then it continued to go down. Okay. But yeah, okay, so that was off topic, but Kraken, that was to answer your question on whipsaw. These are those whipsaw candles where they move in one direction and then they get rejected quickly, and it's a very aggressive move. You know, I don't want to just cherry pick and look for situations like that, but when they happen live, you will see it. Like it's hard to, you know, if you're just following and you're not trading the candle and you're watching it, if you see a big bullish candle, then you see a big aggressive wick, and then it closes down there, and then you know what it did, and then it's got a high probability it's going to continue moving down. Okay, but anytime there's whipsaw like that, there either has to be a session opening, an exchange opening, news. Like the markets don't just move like that just because. There's something that is happening at that time. Whether it's Wall Street market opening, Comex, it's CPI, PPI data that's going to be released tomorrow. You might see a lot of whipsaw action during high impact news. NFPs, FOMCs, London market open, Tokyo market open, futures market open. Futures market is opening up in 30 seconds. You may see some whipsaw action, okay? At right now, like during this market open. Okay. So what was I talking about? Okay, I was going to do a top-down analysis, but let's maybe just watch the first 5 minutes of futures market open, and then I'll do an analysis. So right now, like I know I haven't done an analysis. This is just a half-ass analysis on the 5 minutes. I can see it is in an uptrend. It is pushing up right now. Okay, is there any resistance that I can look at on the 5 minutes? I can see the absolute top up here. This was at Wall Street. There it is. So I can identify that. I can apply it into the future. This is kind of an analysis, but not thorough top down. I'm just doing this for now, just to kind of show us where we have a pivot right there. It came back up. Again, another pivot, went back down, came down. You got a good solid area right here, which was, you can see resistance. Finally, we had a bar close above at 7 p.m. New hourly candle holding above. So if we ever come back down to, look at the number, 4,600 on the dot, okay? So you can see how 4,600 was resistance there. The volume is still below. It's pushing down. Right there, the volume closed above. Now it made this 4,600 possible support. So if it pulls back into here, you could literally look for maybe a possible buy entry off of 4,600 to see if it will maintain this uptrend. Okay, and then you can go backwards and understand how it was support right there at that time. I can look at the time, 11:30 a.m. Eastern. It was support right there there it is. 820 is Comex, 825, and there's your news at CPI at 8:30. It held support. There it closed below. That's why I would have flipped it red. When it came in there, look, it's red, back down. Came back up, back down. Now it slowly creeped its way back up, and it's still pushing up with the first 90 seconds of futures market open. So let's see if the buyers can maybe get it back up to 46.19, 46.20, and then ultimately the big zone is right up here at 46.30. Okay, and then that could be an ideal area to maybe look to sell, because if you look at this whole leg up, there's the absolute top. Okay, and then look at the big leg down. We're coming back up with this leg. Will it get rejected right there at that red line, be a lower high, or will it come into that red zone, and that could be maybe the double top coming back down? Now, it might not just dump all the way down here, because there's levels to the game. It's got to retest this. 46.20 might be a support. It might come back down there. 4600 might be support, because I'm continuing to, and then I see what happens there. Maybe it will bounce. Maybe we'll go halfway and back down. Maybe close below, and then we're dropping back down to take out this low right down in here. Okay, so this was kind of like a half-ass kind of analysis right now. I don't suggest you do your analysis like this. I always do a top down, but this one we walked right into the futures market open. So I just want to carry on with this. So you see this candle has already done its job. It's filled those wicks. Now the next wick behind is kind of like these highs right up here. Okay, so this candle is not going to close in 2 minutes. Let's see what happens if it reaches all the way up to this red point of interest. If the candle was to close like this and close above this structure, this is a structural candle. I definitely would be cutting in half and figuring out the point of control, because there could be just a minor pullback, comes back in there, and then it tries one more attempt to maybe push up higher. Okay, so right now it's still making a higher high, a higher low, a higher high, higher low, higher high, higher low, and a new higher high. So it is still continuing to extend this trend going up, but we have a downtrend from a higher time frame all the way from earlier this morning, 9:10 a.m. Okay, so when we're looking at an ultimate trend, it's still bearish on a higher time frame. This is still a counter trade that's coming up. It's very nice and bullish, but it's still counter trading against this move. Husky, welcome. You went in longs on GC and instant profit. The feeling never gets old. Congrats, bro. Amazing. You're going to get out and go paint your new office? Yeah, man. I got work to do too in my garage. Setting up shelving cabinets in there. I've made it into a gym. I got a sauna in there. I'm going to be doing some streaming in there as well. I put a heater in there. So you'll see, guys. I'll show you some before and after pics. But I kind of want to maybe talk about the markets there, maybe more like a podcast, and talk about exactly what's going on in the markets. Then maybe I come down and I trade down in this office, and maybe down there I can just be myself, have a smoke in there. It's the garage. But it'll be like a real room. I can't park any cars in there. So it's a big gym with a sauna and all the toys, a TV in there, a fireplace, some chairs to watch the football games. I'll be hosting a Super Bowl party in there if anyone wants to come. Guys, leave us a like on YouTube. Thank you, guys. There's only 110 of you guys. I know we don't get a lot of traction when it comes to learning. I don't know why us as humans, it works like that. When it comes to education, nobody wants to learn. But when it comes to just, are you buying or you selling, then we get thousands of people, guys. Believe me, you won't get far in just half-assing your trading. You want to learn this skill, because when you learn this, no one can take this away from you. You have this until the day you die. You have this for the rest of your life. You can share this knowledge with others. You can inspire others financially. That's what I hope that we can all do. We can pay it forward. You know, Dave and I do our best at SST to teach you guys. Hopefully when you guys learn this, you continue to take the torch and inspire others. You know, when you're at the holidays, you're with your family, talk about what's going on with gold. Talk about what's going on with crude oil. You know, you might spark a conversation with others who want to learn this stuff, but don't know who is a trader, don't know who they can talk to. When I was growing up, had no one I knew was a trader. I was embarrassed. I didn't tell people I was a trader. I was embarrassed because I knew the same shit that they would say every single time. Oh, you're a trader, you're going to lose all your money. And in fact, I did lose all my money. So then I would have kind of just agreed with them. You know what I mean? So trading is very lonely. You're going to spend a lot of nights alone, you and the charts. But you know, I love it. I love it. You know, it's like therapy. Okay, so you see now, it came up, and now we're retesting exactly where I cut it in half. Okay, so now if you want, look at that kind of wick. Did you see that? Did you see how fast that happened? So Kraken, when we were talking kind of a whipsaw, did you see how that big black candle came right there, exactly where I cut it in half, and it caught that big whipsaw was a pending transaction. So it picked up a large order there. I don't have the order flow to show you, but if you had a live order flow right now, like Bookmap, Ninja Trader, Quant Tower, you would have literally saw the transaction that just occurred, and it picked up a large pending buy order, is what I'm assuming, because do you see how it rejected and the candle turned back up blue? So that was a large pending order live that we just witnessed sitting in that point of control, right? And if you were in there pending, you see how, yes, you can nail trades with minimal to zero drawdown, and that shot up 40 pips. 40 guys. I literally trade for 20 pips when I'm scalping. That was 40. Like, that candle could have executed you and you would have been right up, and you could have cashed out right away. You know what I mean? That is true scalping. But you see now, if you're holding, now we have not let the bar close. So when it came up there, yes, it did have a nice large pending order, but when it came up there, there's a lot of offers that are offering to that pending buy order. And you see now how the volume is continuing to push down bearish. Okay, so again, that transacted some orders. It had a big wick. Okay, but you see now this candle still has a minute and 39 seconds left to close. So it hasn't naturally closed yet. Now again, it came down there and still transacting in that kind of point of control area. We might have to wait for this bar to close. Sellers might overtake them and close it below here, and we might get one more bearish bar coming down. However, it could flag and consolidate. If we get good volume, continue to hold above 50% here, it could be a bull flag building to continue to drive out of here. But you see how now the volume is concentrated right in that point of control and right in here. Okay, and just by simply cutting the candle in half. I did not do anything magical. I just cut it in half. Okay, now you see it's transacting down here. More buyers are pending, picking it back up. Where will it close? It's got now 50 seconds. So I always say it's like a basketball game. It's like the last 30 seconds of a candle is very important. It will show you who has the momentum going into the close. I know this candle. It opened, it was bullish, it came up, it came back down bearish, it got that big wick, it came back up, it turned blue, back up there. Then the sellers brought it back down. I know that it went back up and the sellers are bringing it back down. So I know who is controlling this volume right now. The sellers still technically are controlling the volume. Look at the volume, the head of the candle. It's black. Yes, there is buyers down here, but sellers are convincing me that they're holding it down. They're offering more. They're absorbing all of these buyers. Next bar has a high probability. If it closes below here, it's going to be bearish and continue to come down to test the opening of the blue bar. Here's the close. This is where sometimes if you want to scalp for a quick trade, yeah, there, short wick, opened, ignited. So what you can do is with that zone that you have, you could flip it kind of red, because if it comes back blue in here, it could be red and they push it right back down. Okay, so it has not retested this red location. Why? Because the bar opened positive, like bearish, ignited, pushed down. Now it's got a wick. Will the candle now flip blue? And we'll see if it flips blue, then we flip that bearish ignited open, and maybe it's going to transact inside here. So what I do is, the previous bar, I cut it in half. That black candle, cut in half. See now how it's blue coming in. So let's see now if it will get rejected and shoot back down. Okay, now it's transacting back in here. If it comes up, then I know we're barcoding. Blue, black, blue. But if it gets a lower high, they could absorb that and then push it down for that next leg down, and possibly maybe look for a sell to come down. But when you're selling, you're still selling into this bullish trend. You're still selling into this supporting pivot area right there. So if it comes down there, you have to be very careful. You might have to take some profit out there because that's where it could bounce and the buyers are stepping back in. Okay, but the ultimate good buy would be down in here. So I know as a seller, if I'm selling and it breaks there, when it gets down there, I don't give a shit. I'm closing partials. I'm closing maybe the whole trade, because if it comes in there, that's where it could go right back up. And again, I could be pissing away all my profit. Okay, so I'm a zone to zone trader. I trade from one zone to the next zone. Either if it's from this zone to that line, I still make a determination there, whether I'm going to take my stop loss break even, I'm going to take 80% out, whatever it is. But I'm not guessing. If I do take the trade, I'm already now measuring it if it comes down there, okay? If I take the sell, it's going to be somewhere below this opening price, because all it has to do is take out that wick and I'm in the money. So I'm already measuring it from that distance, come down to that supporting level. It's 65 pips. That's more than good enough for me. But now you see how it's coming right back up blue. It's still building. It didn't get a wick at that 50%. Now it's coming right back up. This could be blue, black, blue, close above here, and it's continuing to go up bullish. And then they trapped all those sellers in that bar, okay? But now we're literally barcoding. Now we're in a range. Blue, black, blue. Bullish, bearish, bullish. It could be in a bull flag, still holding that bull flag. So this is where you can adjust your flag. Now just bring it down to where the bodies are, right there. Make it green. You're still now in the bull flag, still trending up. So you see, I was maybe looking for a sell, but I didn't get what I was looking for. I did not get the retest and the sellers to reject it back down. Does that help, guys? Does that help me explaining that to you right now? Yes, Market Raider, you're absolutely, I love what you just said. The serious traders are in the house tonight. I do respect all of you guys, everyone on Zoom and YouTube. I have the utmost respect for you guys because this is a learning session. You know, people come in and then they say, "Ron, are you trading?" I say, "No, they already are logged out. They're out." But you guys, I'm telling you, you guys are going to benefit from more than anybody on these calls. So thank you. And I appreciate all of you guys, honestly, from my heart. I respect you guys. Some of you guys are messaging me on Instagram. You're saying, "Ron, it's 3 a.m. and I'm locked in with you with one eye open. I'm laying in bed." Guys, you don't know how much that means to me. Like, I pray for all of us that we get blessed from these markets. And I hope this education really empowers you to continue to learn. I'm not just saying that, okay? I'm not just saying that. I really, really honestly mean that. I know how this can literally change your life. We watch on a daily basis, Dave and I here at SST, we see lives being changed. They show us. They show us. One trader in our group showed me the discharge paper from his mortgage. He paid off the last $240,000. December 12th, he showed me the paper. And he was trading with us for the past 3 years. It was unbelievable. You know, like he paid off his mortgage in the last 3 years. He's mortgage free, debt free now. Like what a burden, you know, when that happens, that's, man, I can't even explain that. Like that's humbling, you know. And it's all through not just me and Dave, but everyone at SST. You know, you guys in the Discord. Let me put the Discord so you guys can see the chat and everybody in here. So this is the commodities Discord over here, guys. Some bread for the snipers. Book, oh, look at the mira. So look at we literally break bread together. There it is. You know, we break bread together. But look at Tyler showing the charts. Mike over here. Everyone. M showing the charts. You know, everything, guys. I love this. I love seeing this. A very positive community. We're all working together. Like I said, we lose together. We're gonna win together. We're going to have fun together. But good, guys. I love this. Keep it going, guys. You know, wow, Tyler. Like, look, almost $3,000, guys. Like, I don't know about you, but $3,000 is a lot of money for anybody. That's a lot of money. That's could be a 1 month's paycheck made in a day of trading. Look at holding from. Look at the psychological number, Tyler. 4,574 cents and 75 cents, and you took it up to 4,600 psychological level. 250 points, standard lot, almost $3,000. Congrats. But guys, look now how we're kind of blue, black, blue. See the red line, the previous cut point? It's still now holding as support. So still holding in here. We could get a blow off top where it continues to go bullish. And maybe I would look to take out this resistance. And if it's got enough power to drive back up to the big red box would be nice, but look right there. See that big black bearish candle? It's already retested 50%. So you have to acknowledge right there. You have to. And look at the number, 4.6 and a quarter, $4,625 right there. It did try and come back up there. They rejected it and had a big move down. It came back up, lower high, pushed back down. Came back up, lower high, started this downtrend. Now we're coming up slowly, higher high, higher low, made a new higher high, but You know, if it can break out of here, that could be a resistance where they're holding it down right below the big block up there, okay? But look at now how it's still continuing to go. If you guys are in buys and you're still holding this, you know, it's still trending up. If we now get the blue volume to close above here, we could continue to build off of this and continue to drive. RSI is at an overbought condition, but gold does not give a shit about RSI. If gold wants to move, it will move. It doesn't care what this indicator is telling you. I know it might also show you that there's bearish divergence and it might lead you into selling when I don't see a physical seller showing me their strength. This they showed me, but there was no continuation. So I still give the upper hand to the buyers. You know, if I want to sell here, I know that I'm counter trading. So I either cannot sell, I have to wait for a bigger block on a higher time frame where the bigger sellers are, or I gotta, you know, look for sellers to close below here to push down, or I just wait to buy pullbacks. That's it. You got to trade with the trend now. Remember, if you counter trade, you got to have counter trading rules. This is still bullish. It's still making higher highs and higher lows. The volume of the candle is still doing its job by continuing to make new high wicks. Holy Ghost, you're still holding 270 pips running on your runner. Amazing, bro. Congrats. You know, that's respect. Well, I hope it goes 300, 400, 500. You get a massive runner. That's amazing. That's amazing. But while you're watching your runner, Ghost, listen to me. Your runner is like your soldier. It's continuing to go through the battlefields. You know, it's continuing to go through war right now. Follow your soldier. Your soldier will tell you information. Can your runner, it's like your soldier, can it continue to break this resistance, that resistance? And then what will happen if your runner gets up to this red block? And then if it gets rejected there, then it's telling you the strength of this block. You know, I learned so much by my runners. That's a reason why I leave runners in the market. Even if they're 10%, 20%, it might not be a lot of money, but what it's physically telling me is I'm following that runner. It's literally letting me follow it until it kind of dies or until it finds resistance. So it tells a lot of invaluable information that you're getting from the market where you're in the money. It's very valuable because sometimes where, you know, if you just go into a trade and you close it entirely, that's it. You're done with the trade. You might be now like walking away from the markets and you're taking your eyes off the markets. A runner, yes, you could still cash out like what I do, 80%, leave 20% running. I can walk away from the computer, but I have it on my mobile. I can still see my runner moving. So it's still telling me. Then it tests my theory. If it gets up to this block and it gets rejected there, then I know that this block holds more strength than this line and this line. So I'm continually learning with my runner in the market, guys. Okay. So that's another advantage I don't really talk about. Okay. We always just talk about making money. We keep a runner to obviously make more money, but there's valuable information that your runner is telling you. Like, did I explain that properly, guys? Do you guys understand what I mean by that? You know what I'm saying? I know I sometimes talk stupid, but I'm trying to think like what when I leave a runner, what it's kind of telling me. Wen Moon, I love your name, bro. I think you got the best name here, Wen Moon. I used to say that with Bitcoin, Wen Moon. Another reason for leaving the runner is the mindset, the psychology, what I'm trying to explain. It's more than just, you know, a dollar figure behind it. Yes, it's nice when we're making money, but the valuable information that it gives you, you can continuously learn from it. Okay, guys? So this is still bullish. You know, it's still running. Guys, unfortunately, I don't want to rush a top-down analysis. We only have like 5-10 minutes left on this call because I got to go help the guys in my garage. But tomorrow, please join us, please. It will be class 3, and we're going to start it tomorrow with now a top-down analysis. And we're going to put everything we learned, okay? So tomorrow, be ready. We're going to start off on the daily, then we're going to analyze the daily. It's going to be very thorough, okay? And then we're going to move into the 4-hour and the hourly. It's going to be very thorough, so be ready. And then we're going to move into the lower time frames. We'll possibly, if we see some live trades, we'll take some live trades tomorrow. But I want to really break down points of interest, points of control tomorrow, zones, and that's what I want to go over tomorrow. And we'll look for pattern recognition, and either is the market trending, is it ranging, but we'll learn tomorrow together again. So I hope you guys enjoyed our day 1 and day 2. These will be left for you guys available on YouTube for you guys to continue to review. But I'm telling you guys, in the next few weeks, a lot of these are going to be private with the Zoom, or we can do it on YouTube. I don't care. But what I need out of someone on Zoom is to unmute your mic and talk to me. It's going to be like a live one-on-one coaching session with whatever you need. Okay. Once I'm done teaching all of this stuff, it's literally a free one-on-one for somebody. You can come on here and talk with me about your trading, and I will try to the best of the ability to help you with the limited knowledge that I know, but maybe we can get help from the entire group. Everyone on YouTube, everyone on Zoom can help together. And I guarantee you, if you're having a problem or something with your trading, there's probably someone else that has the same problem. So at least we can maybe help others, like, and then when they hear your voice instead of mine, maybe it might help others, okay? Because everyone hears my voice, Dave's voice. Maybe we need to hear someone else's voice, okay? And I'd like to do that tomorrow. I'll do the top down. But while I'm doing the top down, if someone wants to talk with me while I'm doing it, maybe ask me some questions while I'm doing the top down. But I want these sessions to lead them, okay? Because after I do all of the price action, all of the basics, other than that, it just comes down to how properly you're journaling, how properly you're adhering to your risk management. We've already done multiple boot camps on risk management. Guys, I forgot to tell you here on the website, like, look at the education, okay? So we've already talked 1 class, 2 classes of just price action. If you come over here, you have an entire price action course where you're learning everything here, where I talk about intro to candlesticks. You learn about the bullish engulfing, bearish engulfing, hammer, shooting star, the bullish and bearish harami, your pin bars, your spin tops, your inverted hammers, your hanging mans. These are your 2-bar patterns I was talking about, your piercing line, your dark cloud cover. These are your 3-bar patterns, your morning and evening star we talked about, your 3 soldiers, your 3 crows. Here are the videos with quizzes. Okay, this will help you with your price action. But further education, then you take it into support and resistance, chart patterns, technical indicators. They're all here, courses, quizzes. Finally, you get down to here, how to utilize like a complete guide of our trade ideas, the Scalper Pro ideas, recaps. Then here are your long form boot camps. These are 3 to 5 day boot camps. Intro to Forex, psychology and trading, your cryptocurrency boot camp. Here's the risk management we just did. This one's coming up very, very soon, stock and options, so get ready. That's why I want you guys to learn the basics so we can start moving forward. And then here's a 3-part series on a trader's process framework. Finally, we go into here. So if you're a beginner, here's where you get started. 1 to 10 webinars. These are 2 to 3 hour webinars, or 1.5 hours. Then when you advance, you go to the intermediate webinars, 11 to 30. Then you get to the advanced level, 31 plus 100 webinars. But when you start off, this is exactly everything we've been talking about the last couple of days. The basics of Forex, almost a 2-hour webinar. Webinar 2, intro to trading view. Okay, you got to get familiar with trading view, learn how to utilize your tools. It's your toolbox, set you up for success. Learn how to use your alerts, your indicators. So here's the intro to candlestick characteristics. Remember, we started, the first thing I said on our live session for day 1 was all candlesticks have the same characteristics. So here's a more in-depth webinar regarding that, 1 hour and 10 minutes on candlestick characteristics and timeframes. Here's your bullish price action family. Here's your another video on the bullish price action family. Here's your bearish family, bearish and bullish volume. Now you're learning about volume. You need to have a trading plan and routine. Here was where we spent almost 2.5 hours going over a detailed trading plan and a routine for you guys. Here's types of trading accounts. We talked about the importance of a demo. Maybe some of you guys are using prop firms. Some of you guys are self-funded traders. There's a different mindset to all of these different types of trading accounts. I know that I have a different mindset when I'm trading my own money if I was trading a prop firm, or if I was on a demo account. All of them, you need to learn these things, okay? And then finally, what it takes to be a trader. To be a trader takes a lot of hard work, a lot of sacrifice, a lot of stress. Okay, it's not easy to be a trader, but once you go through this, I believe then you're ready to go to part 2 and start now your next phase. So now you got to learn. Once you learn price action, now next is your support, resistance, trends. You got to learn your trend lines, support, resistance, accumulation, distribution. What are your zones? Again, these are all the names: supply, demand. Just a green box stretched across in the future. Accumulation, just a neutral box that stretched across into the future. Know your continuation flags, your bullish flags. Like we just saw on gold, a bullish flag, developing and possibly breaking and continuing to move. See that big bearish candle that just came down? You still see how it's still inside the green zone and it's coming right back up. Again, the sellers have not convincingly closed below there. They're trying to push it down, but it's not there yet. Maybe finally, if there's a black bar that closes below here, I flip that red zone green again and a retest, then it may be getting ready to sell back down there, because now I can see lower high, lower high, lower high, and I can see maybe the buyers are getting exhausted, but they're still there. They're still accumulating. It still could push up. And yeah, guys, so I don't want to go through the entire website, but there's so much available here for you guys, and also the free blogs that Dave and I do for you guys on a daily basis. Here was the gold trade recap. Please, guys, read this. It's a detailed trade recap of the signal that we sent out, and it was a proper setup, just perfectly like executed. Just takes a little bit of patience, discipline, watching what's going on, and everything available here. It's for you guys. Okay, guys, I apologize, but I gotta go help the guys. They're texting me in the garage. They need me to help them put up some shelves. And tomorrow same time, 6:30 p.m., our midweek Wednesday, come on here, join us tomorrow. Everything we learned in the last 2 days, we're going to put together in a nice detailed top-down analysis. I would love if someone on the Zoom unmutes their mic and just has a conversation with me. Just talk to me. Tell me how your day is going, how your trading is going. We can carry conversation while I'm doing the top-down. I can explain things, but I like to do that. More engagement. It's fun. We all learn together, and we have a good time. So please don't be shy. I know all of you guys are shy, but enough with this. Come on. Just let's hear your sexy voice tomorrow, all of you guys, okay? But thanks, guys. If you're going to continue trading tonight, just please trade proper. Proper risk management always. Continue focusing on becoming a better trader by the day. If you did something perfect today, let's say you took 5 trades today, you were 5 of 5, the best trading day you've ever had, still go back and review those 5 trades and learn from them. You'll learn from them. Maybe you're going to learn from your executions. Maybe is there anything that you could do? Just always critique yourself. Give yourself that criticism, but positive criticism, and you'll continue to learn. The more you learn, this is going to become so repetitive. It will become so routine for you. You will be doing this on a daily basis with your one eye open, literally. You will be doing it like that, okay? That's how most of us are trading, with one eye open, because we're so tired, because that's all we do is stare at charts all day. And guys, if you're getting value, leave us a subscribe. We're almost at 100,000. I know we lose a lot of subscribers as soon as we say we're educating. And Danny, no, Habs, did you see them take out Vancouver 6-3? I think we got Washington tonight, if I'm either tonight or tomorrow. It's a big game. Oh, tonight. Oh, Montreal's up 2-0 right now. 5 minutes to go in the second period. Montreal, guys, you heard it here, is going to win the Stanley Cup. So we'll see you guys. Have a good night. God bless everyone. We'll see you guys tomorrow. And guys, anything can happen in the news, okay? With Donald Trump and all the chaos going on around the world, please use proper risk management, because there could be whipsaw candles, what we talked about today. And if you're over leveraged and you're not ready, it could wipe out and do a lot of damage, okay? There's breaking news happening daily, okay? This 2026 is going to be a historic year. And if this is the year you're learning how to trade, please trade careful, because this is going to be a crazy year. Look at how the first couple weeks of January have started, and it's already chaotic, okay? So just be careful. That's why I want to start this year off with education. We'll be right back into live trading and we'll have fun, but I want to make sure we're all on the same page, okay? And we learn the language, how we trade, okay? When I'm saying an ignited bar or a pivot, I want you guys to know what we're saying, because eventually we're going to have some fun. We're going to go on the 1 minute bars, and we're really going to have some fun on the 1 minutes, okay? But you got to understand, a candle's opening every 60 seconds, so you got to really keep up with what's going on, okay? Thanks, guys, everyone. Have a great night. Enjoy your evening. and we'll see you guys tomorrow. Have a good night. Thanks, everyone. I appreciate all of you guys. Have a good night. Thank you. Thank you for joining me on this boring call of education. I know it's not exciting, but I promise you it's well worth your time. So thanks, guys. Have a good night.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.